I think, well, thank you for the question. What we're seeing is very consistent with what the IMF is seeing. What we're seeing is that the global economy continues to be resilient, still on track for a soft landing, although growth is low by historical standards. I think that after having experienced the most aggressive monetary tightening period in recent decades, the fact that the global economy hasn't gone into recession, I think, is great news. And we're seeing that in our business. Last year, we ended with the best performance in 10 years, and we have started this year with a lot of momentum, particularly driven by our markets in Asia and the Middle East, which are two important areas of global growth.
The potential for policy divergence is gathering more speed, and we've seen that after Jerome Powell this week confirmed that the data is a bit too hot for the US, for the Federal Reserve, and that may have implications. We've seen it in FX and the depreciation of EM currencies requiring statements, some intervention even. What are you seeing in terms of the volatility in FX, and is it having an impact? Do you think it's looking a little bit disorderly?
Well, I think that foreign exchange markets reflect the fundamentals, and there is also some noise around that. But if you think of what's going on in the world, with the United States in a different position from the euro area, with China and some Asian economies in a different cyclical position from that of some of the major advanced economies, it's natural that you will have some interest rate differentials moving, and that this is something that would lead to some currency volatility. Now, I think it's very important for flexible exchange rates to play as big a role as they can, and I think that interventions, which is something extremely complex, is something that should only be a very last resort measure when markets become really disorderly. And we know that this has happened only very infrequently over the last few decades in advanced economies. Of course, emerging markets tend to have much more managed floating exchange rates, and I think that's a fact.
I want to ask you about China. You mentioned the major superpower here, and we have seen better data in the first quarter out of China. Are concerns about the economic growth story for the mainland market overdone?
Well, I think that one needs to be balanced talking about China, because I think that China, it's true, it has important short-term challenges and medium-term challenges. Short-term challenges, we all know about the commercial real estate sector, about the issues of local government finances, but in the medium term, there are also demographic challenges. So in the short term, the Chinese economy continues to grow at decent rates. Last year, although helped by base effects, particularly China grew a bit more than 5%, 5.2%. And this year, the government has targeted 5%, and we think it will be close to that target, perhaps coming from below. So I think that Chinese growth is still decent and is an important contributor to global growth. Now, one very important thing is that the Chinese economy is a tale of two economies, the old economy and the new economy. And the new economy, which is driven by commercial real estate in a significant part, is very stagnant, while the new economy is growing very fast. I can tell you that our business in China, if we take into account both the domestic business and the international business, is growing at rates of 25% last year. So that tells you something about the business opportunities that China still brings to the world.